Okay, I want to talk a little bit about characters of gains and losses because this is a little bit confusing in that how is it taxed? So we've talked about things being taxed at their ordinary rate, which means like ordinary income. It's taxed at your tax rate schedule. That's ordinary income taxed at your ordinary rates. But there's also things that get taxed at a preferred rate, a better rate than your ordinary. We talked about qualified dividends get taxed at preferred rates. Capital gains get taxed at preferred rates. Okay, but now we're going to be introducing just a couple more topics to build on that foundation. Okay, so what's the character of the gain or loss? Okay, it's either going to be an ordinary gain or loss taxed at your ordinary rate, or it's going to be a capital gain or loss, and it can be a short-term capital gain or a long-term capital gain. And you know, short-term capital gains are taxed at your ordinary rates. Long-term capital gains are taxed at preferred rates. Okay, so when we're talking about the character of the gain or loss, it's going to depend on the purpose or use of the asset. How are you using the asset? And it's also going to be determined by how long you held it, either short term, which is under 1 year, or long term, over 1 year. Okay, so whenever I say something like, how is land taxed? Well, you're not going to be able to figure it out from there. I'm going to have to tell you, how am I using that land? That's going to determine how the gain is taxed. Okay, so we talked about it's going to depend on the use of the asset and your holding period. Okay, so when we're talking about the character, when I talk about ordinary, it's taxed as your ordinary income. If it's a capital gain, it's taxed usually at the preferred rate. Again, that's for at the long term. Short term taxed at ordinary. Or now we're going to be talking about Section 1231 gains. Now these is the best possible scenario, right? Because losses are ordinary and gains are taxed at a preferred rate. So let's think about that for a minute. So as we know with capital losses, how much are you able to deduct a year? $3,000. Capital loss, you're limited, right? You can't just offset, you can't just deduct if you had a $3 million loss on some stock you sold. Well, you would only be able to deduct $3,000 a year, and then you carry the balance forward, but that limits you. But with Section 1231, there's no limit. Losses are put up against ordinary income. It's a great scenario. Okay, gains are taxed at a preferred rate. So my losses I can deduct without limit, and my gains taxed at preferred rates. That's just an ideal situation there. But the one thing we need to look at with the gains in Section 1231 is that depreciation recapture can change the character of my gains to the ordinary rate, and I'm going to talk a little bit about that. Okay, so it's the property use of the asset that tells you the type of the gain or loss you're going to have. So how am I using that asset? So am I using it in a trade or business? Okay, if it's inventory in a trade or business, by definition, inventory is taxed at ordinary rates. If you have gains on the sale of your inventory, I don't care what, it's taxed at ordinary, because this is what defines how that gain is taxed, the use of that. If it's inventory, it's ordinary. If it's machinery, say example, in a trade or business, then it's 1231 asset gains if it's held over 1 year, and it's ordinary if it's held under 1 year. Okay, these are assets used in my trade or business. Okay, production of income is basically rental. Okay, that's how they talk about it in the textbook, is production of income. If I hold it over 1 year, it's Section 1231. Under a year, it's ordinary. If it's investment, I have invested in these assets, then it's capital. Okay, so we're going to be either short-term, long-term taxed either at the ordinary preferred rates. And if it's personal use, so I'm using it for my own, like my own car, well, that's a capital asset. And remember, I'm not able to deduct losses for assets that I use personally. So, but my gains are taxed at the capital rates. So again, we're looking at short-term or long-term. Okay, so let's look a little bit about business property, how we get to this wonderful Section 1231 land, business property. So I have to use the property in a trade or business in order for it to be Section 1231. So again, my production of income, that's rental, that's business. So it does qualify for Section 1231 treatment. So all business, all property used in a trade or business, by definition, is Section 1231. Okay, so personal property, not personal use property, but personal property, meaning property I can move around, which would be equipment and furniture. That's by definition, that's called section 1245 property. So 1245 is within section 1231. This is the code section that tells us that it's property used in a business and it's personal property, section 1245. Real estate, real property, which means my warehouse and that kind of thing, that's section 1250, used in a trade or business. And then I have land, and as we know, we don't depreciate land. It's a pure section 1231 asset. So that kind of should help you figure out all the different sections it's talking about in this chapter, section 1231, section 1245, and section 1250.